Dr. Nageswaran, I want to take that rupee point forward that Maria raised, and also the flip side would be a trade-off. You as a professional economist know this, but for the benefit of our viewers, there is obviously a trade-off between export competitiveness and lower input costs. If we are to become a manufacturing hub of the kind that we aspire to be, import costs will also feed in and distort the equation. Is there a trade-off point, and do you think this is the time, this is the level that perhaps we have reached trade-off?
No, I don't think so. I think if I understand your question correctly, at what point the rupee level becomes negative?
Because you won't call a level. That's why I didn't put it to you that way.
No. I mean, so it is very difficult to be precise about a number, a numerical value there. Say at this point, the rupee becomes more of a negative, a weaker rupee becomes negative because it raises the import cost more than it incentivizes better exports. That is not possible to say so. But in general, the work we have done in the econometric work, and we're showing it in the survey, that on balance, India actually benefits from a weaker rupee, considering the kind of manufacturing competitiveness we have. So the answer, therefore, is because when a currency becomes weaker, naturally imports become costlier. Yes, unavoidable imports will become, therefore, costlier. To that extent, it's a burden. But unavoidable imports are relatively, crude oil, fertilizer, some essential base metals, etc. Gold is not, you wouldn't call it essential import.
Yeah.
I mean, it's a consumption item in some sense, but it's not an essential import. Those becomes expensive, and to the extent it discourages gold buying, probably it's not a bad thing from a macro perspective.
Should we be prepared for the rupee to depreciate further?
It's a very difficult question to answer because it can turn on a dime, as they say. I mean, so the rupee.
Yeah, if the US deal happens, you will see a reverse.
Exactly. So I don't think it is appropriate on our part, because what we say also influences expectations. Therefore, I shouldn't be talking loosely about, okay, the rupee depreciation can go up to X percentage or Y percentage. I think that is very difficult also, because what is happening today isn't only unique to the Indian rupee. It's happening to many other emerging market currencies.
It's the dollar
So I don't think we should be overly concerned at this point, because it is a global phenomenon. And right now, the net cost benefits are in our favor of a weaker rupee. Yes, and we have ample foreign exchange reserves, and we are diversifying our export destinations. So we are doing all the right things, and therefore we should be a little bit calmer about the rupee.
Keeping that point is essentially about the free fall, what is being seen of the Indian rupee, the depreciation, sir. All these trade deals which has happened particularly in 2025, and of course, the mother of all deals, which the Prime Minister said is the deal for the global good, which is with the European Union. Can that, or has that had any impact on the overall assessment of the Indian currency?
Early days. I mean, the European Union agreement happened barely a couple of days ago. So it's under other countries are relatively smaller in size. And moreover, we should remember that all these countries have to go through their respective internal processes before they actually become effective. I mean, even in the UK case, the parliament approval is yet to be obtained. So for Indian exporters to enjoy the benefits of easier access to those markets, that is still not yet a reality, because the agreement has been signed, but the internal processes are going to happen in Europe, and it is happening in the UK Parliament as well. Once it is done, then you will begin to see the real economy impact of this.
Okay, so that's going to be perhaps a couple of more quarters.
I think so. I mean, in the case of UK, it may happen in the next couple of quarters. I think the European Union agreement also may take anywhere between 6 to 12 months before it completes all the internal legal vetting and the parliamentary approvals in Europe, etc.
Dr. Nageswaran, one final question from my side, and we are looking beyond the budget because obviously the budget can't be revealed here, but you've been very candid in your responses. At the end of the month, we will see a big overhaul of big data, the macro statistics. And this is being noticed around the world. It was even spoken about in some forums at the World Economic Forum. How significant is this exercise? And as a result of that, can you look ahead and tell us what will it mean for our overall growth numbers?
No, I don't think it is possible for me to spell out what it would mean for growth numbers or whether the GDP base itself will become larger, smaller, remain unchanged. All possibilities are open. It is about methodological improvement. Definitely, we will be able to capture more parts of the economy on a regular basis than we have been doing so far. That is a big improvement. And second, some of the goods which we were not producing even 12 years ago, like smartphones, is not part of the index of industrial production. That will become now part of it. And I think given the fact that incomes have grown, food will be a smaller component of your monthly consumption basket. That will get reflected. So I think this is about the methodological improvement, capturing more formal activity and a more accurate depiction of real economy using high frequency data, etc. Whether it, see, a big improvement in the GDP size would then mean that we have not been capturing a large portion of GDP.
But will it answer the IMF's criticism? They
No, no,
gave us a C grade.
No. IMF's criticism was about many of the things that will be fixed, which was base year not being revised for 15 years, and the basket of consumption and the basket of items in the industrial production. All these things are the ones that will get fixed. And IMF grade, by the way, is on one or two specific aspects that influence the overall. But the overall rating for India's statistical system was a B. It's on national income portion that was rated as C. And I think what Ministry of Statistics is engaging in, which we will all see on February 27th, will fix most of that criticism. And I think IMF did not question the reliability or credibility of our numbers. Those questions were more technical in nature.
Absolutely, yeah. If the IMF has a B or a questionable C, I question that. It's very clear that Dr. Nageswaran gets an absolute grade A, in fact, a triple A grade for the survey, for its depth, for the diversity of its content and all the surveys.
Consistency.
Absolutely. Since 2022, you've been here, and it is a treat not just for the watchers of India's economy, but even for those who may have even a passing interest in how India's path towards Viksit Bharat will take off. Dr. Nageswaran, thank you very much for your time with us today. On behalf of the entire India Today network, we thank you for your time with us. So much for a wrap on this conversation. We'll be back with more. Until then, namaskar and goodbye.